Have you been wanting to learn how to do crypto futures trading? If yes, then watch this video to the very end. In this video, I will be showing you exactly how to do crypto futures trading. I will be explaining some crypto futures terms that you need to know. I will also show you how to take trades, either short or long trade. And towards to the end of this video, I will be sharing some tips to make you a good and profitable crypto trader. Now, before I continue, if you are new to my channel, I'm Nelson Ede. I create videos to help you learn about cryptocurrency trading and how to invest in cryptocurrency, and generally to help you learn how to maximize the profit potential in cryptocurrency space. Don't forget, subscribe to this channel, turn on the notification bell, and like this video. If you have any question about this video or any other question concerning cryptocurrency trading, investing, or in general, use the comment section and let me know. Let's start by understanding what futures trading is. Futures trading is a type of trading that allows traders to speculate on the future price of a cryptocurrency. So with futures trading, you are basically speculating and predicting the future price of a coin, if a coin is going to go up or if a coin is going to go down. When you do futures trading, you are actually buying and selling contracts created to drive its value from the original price. Example, when you trade Bitcoin on the futures market, you are actually buying a contract that is created to take its price from Bitcoin, and you are not buying actual Bitcoin. Rather, you are buying a contract which can expire or that can last forever. So bear that in mind. With futures trading, you can profit either way. Either the market goes up or down, you can still make profit. If you are trading Bitcoin on the futures market, if Bitcoin goes up, you still make profit. If Bitcoin goes down, you still make profit. So futures trading gives you the opportunity to make profit. Either the market goes up or the market comes down. Before I continue, there are important things I would like you to know. 1. You can make a lot of money from crypto futures trading. You can turn $10 to $100 and you can turn $100 to $1,000. 2. You can lose all of your money with crypto futures trading. You can lose your $1,000 in a day within a second. You can lose your $10 within 5 minutes. You can lose any amount of money you have within a short period of time. 3. Futures trading is for experienced traders. I always say, before you do crypto futures trading, make sure you've already mastered spot trading and be good at spot trading before you proceed with crypto futures trading. Also, I use Bybit for my leverage trading. Their fees are very low and it has been a very wonderful experience using Bybit. You can equally register right now on Bybit using the link at the description of this video. And when you register, you have the opportunity to get $30,000 bonus when you make your first deposit on Bybit. For this video, I'll be using the Bybit exchange to show you how to do crypto futures trading. Once you open your Bybit application, the first thing you need to do is to transfer your USDT from your spot wallet to your derivative wallet. Don't be confused about derivative. Futures trading is regarded as a derivative trading. So once you open your Bybit, you click on the asset, which is the option at the bottom right. Once you click on that option, it brings you to your wallet section where you have different kinds of wallets. The next thing you need to do is to click on the transfer button, which is at the right corner. Once you click on transfer, it gives you this interface to enable you to transfer from one wallet to another. And what you need to do here is make sure that the first wallet that is selected is spot account and the second wallet that is selected is derivative. Then you select the coin you are transferring. In this case, we are going to be transferring USDT. So we'll select USDT and you can type in the quantity of USDT you want to transfer, but in my case, I'll be using max. Once I click on max, it automatically input everything I have on my spot wallet. Then I can click on transfer. Once I click on confirm, it automatically transfers my USDT from my spot wallet to my derivative wallet. You really need to have money in your derivative wallet to be able to trade crypto futures on Bybit. Then you click on the derivative button, which is the center button at the bottom of this app. Once you click on derivative, it brings you to Bybit futures trading interface. Then the first thing you are going to notice is at the top of this application, you are going to be seeing USDT perpetual and you see USDC perpetual. USDT is a stable coin and USDC is a stable coin. So this option is for those who are using USDT and for those who are using USDC. In our case, we are using the USDT. We don't need USDC perpetual, so you don't need to be worried about that. Under USDT perpetual and USDC perpetual, you have two options, the chart option and the trade option. When you click on the chart option, it brings you to this interface. where you can do your technical analysis to determine your entry and your exit from a trade using candlestick and many other technical indicators. Technical analysis can be intimidating at first, but over time you get used to it as you keep learning. I've equally created a simple tutorial to guide you through on how to start your technical analysis journey. The link to that video is going to be on the description of this particular video. When you click on the trading option at the top, it brings you to this trading interface. This is where you are going to be doing most of your trading from. First, you click on BTC USD. When you click on BTC USDT, it brings you to this market section. This is where you see list of all the coins you can trade on crypto futures. Going through this market section, you can quickly do a search to get a coin you want. Let's say you click on the search box at the top. You can search for a coin like XRP USDT. This will give you XRP, and once you click on it, it gives you the interface to trade XRP, which is Ripple. Well, if you click on it again, let's go back to BTC. We can search for BTC USDT. Search for BTC USDT, and this gives us Bitcoin USDT. So that is how simple it is to use the market section. Before we proceed, if you look under BTC USD, you are going to see isolated 10x. When you click on it, it gives you this interface to increase your leverage. And what is leverage? Leverage is the use of borrowed funds to increase your trading capital or your trading position. Example, with 10x leverage, you can increase your $10 to $100. You can increase your $100 to $1,000, and you can equally increase your $1,000 to $10,000, because leverage works in a way that the quantity of leverage you are using is going to be multiplying the amount of money you are using. Example, if you are using 10x leverage with $100 capital, it's going to be 100 times 10, which will be giving you $1,000. With that, you can trade 1,000 position by just risking $100. That is the beauty of using leverage. Leverage can make you make high profit, and leverage can make you get liquidated within minutes. When using leverage, I recommend you use 5x leverage. With 5x leverage, you can handle the volatility in the market, and you're going to be on the safer side to compare when you are using 10x, 20x and above. You can use above 5x if you're already experienced in using leverage. But for a start, I recommend you use 5x leverage, as this will help you a lot on your trading journey. There is two types of leverage: isolated margin and cross margin. With isolated margin, you have the opportunity to isolate some part of your capital in a particular trade. Example, you have $1,000 trading capital and you open $100 trade using isolated margin. You automatically isolate that $100 to that trade. You can only make profit on that $100, or you can lose that $100. This helps you to reserve your $900. In cross margin, all your capital is in the market. Example, if you have $1,000 trading capital and you open a trade with $100, automatically your $900 become a backup fund to hold that trade, because you are using cross margin. But in isolated margin, the $100 become isolated and cannot be touched. But in cross margin, if the market continue going against you, your entire $1,000 gets liquidated. So I strongly advise, if you are starting out newly on leverage trading or futures trading, make sure you use isolated margin, as this will help you save your capital and help you control the volatility in the market. So once you are done setting your leverage, which I advise, make sure that your leverage is set to 5. Don't do anything above 5. You can do less than 5 and 5 maximum. Then if you look by the right side, you see funding rates through countdown. Funding rates are periodic payments either to traders that are long or short, based on the difference between perpetual contract market price and the spot market price. This simply means that perpetual contracts, these contracts run forever. Their prices get increased over time based on multiple traders trying to capitalize on the price movement. Most times, the price becomes different from normal spot market. When the funding rate is positive, the price of the perpetual contract is usually higher than the market price. In that case, traders who are in long position pay a little fees for short positions. Also, when the funding rate is negative, traders who are in short position pay little fees for the long positions. That is exactly how funding rate works. So let's open a trade. For us to open a trade, you have to select the coin you want to trade. In this case, you click on BTC USDT and you can search for any coin you want to trade. But in my case, I'll be trading Bitcoin, so I'll just leave that selection the way it is. Then next, you set your leverage. You click on leverage. Make sure you select isolated and you use 5x. Like I said, use 5x unless you're already experienced in futures trading, then you can use above 5x. But if you are just starting out, 5x is ideal for you. After selecting your leverage for both short and long position, you click on save. Remember, in leverage trading, you can either go long or go short. When we say go long, it simply means you are predicting the market will go up. So when you open a trade as a long position, if the market starts going up, you can only make profit when it goes up. But if it goes down, you start losing your money. Then when you go short, you are predicting the market will go down. You make money when the market goes down. If the market goes up, it's going against you. If it goes against you, you are going to be losing your money. So with that, after we've selected our leverage, next you see open, then you see limit. When you click on limit, you see limit, you see market, you see conditional. These are the 3 different types of orders you can set on Bybit. Let's start with limit. If you open a limit order is order where you decide the price at which you go long or short. Let's say I put $16,000 here. If I put 16,000, it means I'm deciding to go long or short if BTC gets to 16,000. Then I toggle this percentage bar to decide the amount of my capital I will use. If I toggle it to the right, you see the percentage keep changing. If I want to do 70% of my capital, I could leave it here, but let me do 95%. I could toggle it to 90%. Then when you click open long, Bybit gives you this order confirmation page. In this order confirmation page, you see order price, which is 16,000. You see order quantity, which is 0.007. You see order cost, which is $22.52, which means I will be opening this trade with $22.52. You see value. This value is the total USDT cost of my trade because I'm using 5x leverage. So my 5x leverage times 22.5209 will be giving us $112. Then position leverage isolated margin, which is 5x. Take profit is nothing. Stop loss is nothing because I didn't set stop loss. Then estimated liquidation price is $12,880. This means that if BTC get down to $12,880, I will get liquidated. Time in force simply means the time this trade can execute or the time it can be cancelled. That is why it said good till cancelled. So this trade can only be cancelled in 2 ways. It's either I cancel it myself or the market gets down to 16,000 and automatically this trade will be activated. When I click on confirm, automatically you can see when you look at orders, you see that I have an open order with option to modify or cancel. That is how limit order works. So this order will remain here for the next 1 year, for the next 2 years till BTC gets to $16,000. That is why it's called a limit order. That price you set must be met. So I will cancel it so that we can check the market order. Then when we click on limit again, we see market order. We can pick a market order. A market order is a kind of order that executes with the current market price. In this kind of order, you don't have option to decide the price at which you go long or short. If I toggle this percentage bar to select the amount of capital I want to use, then I click on open long. When I click on open long, it gives you this confirmation page again, which we've gone through already. I will click on confirm. When I click on confirm, you can see automatically my order was activated and you can see I have an open position. Now, your order is regarded as a position because this is a perpetual trade. It means you took a position deciding or predicting that the market will go up or go down. That is why it's regarded as a position. You did not actually buy this coin, you are actually taking a position on your prediction. So that is why it's regarded as a prediction. And before the order is being activated, it's regarded as an order because it's not yet activated. Liquidation price is the price at which this coin will get to and I will lose all my capital. I can set stop loss. To set your take profit and stop loss, you click on set TP/SL. When you click on it, it gives you option to put the price at which you want to take profit. So since I'm on a long position, I can say I want to take my profit when BTC gets to 16,900. And if BTC gets to 16,900, I'll be making just 4 cents. So I could say when BTC gets to 17,000. So if BTC gets to 17,000, based on using 5x and with a very small capital, I'll be making $1.2. Stop loss, I can put my stop loss that I want to leave this trade when BTC get down to 16,200. and if BTC get down to 16,200, I'll be losing $5 because my stop loss is quite large. I can put 16,500. If I put 16,500, I'll be losing $2.8. And after doing that, I can click on confirm, and immediately I confirm my take profit and stop loss. You see that it's changed from take profit and stop loss to 17,000/16,500. So the first value there is your take profit, and the last value, which is in red, is your stop loss. Then to close this trade, I can simply click on close buy. If I click on close buy, I will click on confirm and I will close this trade. So that is for the market order. Now that you have the understanding of market order and limit order, let's now study the conditional order. When you click on limit, you select conditional order. You see a trigger price and you see order price. This trigger price is where you are going to be putting the conditional price, while the order price is the exact price by which the exchange will execute your order. Now, let's say we want to long Bitcoin when Bitcoin gets to $17,000. We could come here and we'll put 17,000, which is our condition and which is the trigger price. This is the price that Bitcoin must get to for our order to enter the order market. And after we put 17,000, let's say we'll then put 16,900. This is what we've actually done. Once Bitcoin gets to $17,000, Bybit will place an order for us to go long at 16,900. So this is in a way that I expect Bitcoin to go to $17,000, then retrace to 16,900. And if it gets to 16,900, I'm telling Bybit to take a long position for me, because I believe that from 16,900, Bitcoin will continue going or probably break 17,000 to 17,500. Then in quantity, you already understand quantity by now. I'll just toggle this percentage bar, then and place my long position. This is the same order confirmation page, which you already understand by now. And once I place my order, you can see that my order is already on the open order session, but not yet active, because this is a limit order. This is a conditional order with a limit order, and I will show you a conditional order with a market order. So I can cancel this order. For you to set a conditional order with a market order, if you look at where I put 17,000, then by the side you see last, you look at where I put 16,900, you see by the ending part of it, you see limit. If you click on that limit, you can select market. Now, any order you put here is going to become the market order. What happens is you will no longer have the option to specify the exact price you want to enter the market. Rather, your trigger price and your entering price is going to become the same. So since I'm longing the market and my conditional price is 17,000, it simply means that once it gets to 17,000, this exchange is going to take a long position for me. My trigger price is the same with the market order. Since I'm setting this conditional order with a market order, it's as that simple. If I toggle this again, I can place my order again, and this order is not going to execute because it can only execute when Bitcoin hits $17,000. Now, to use a conditional order to take a short position, I could say when Bitcoin keeps falling and Bitcoin gets to 16,000, I could use a limit order. I will put 15,950. I'll put 15,950. So what I've actually done is, because I'm planning to take a short position with a conditional order, if Bitcoin continue falling and get to $16,000, I want Bybit Exchange to open a short position for me at 15,950, because I believe that if Bitcoin gets to $16,000 and get to 15,950, we could be seeing Bitcoin around 15,400, 15,300, which will give me profit on a short position. So I could equally place a short position order with this, toggle the percentage bar, then open a short position. And this position is not going to execute because this is a limit order and the markets need to get to that trigger price. Bitcoin needs to get to 16,000 before this order can trigger, and it's not going to activate immediately because once it gets to 16,000, the Bybit exchange will place an order for me at 15,950. That is how conditional order works. So most times I will only recommend you start using conditional order when you've mastered the game of trading. But currently, if you are just starting out, just stick with your normal limit order and leave conditional order. But with this video, I believe you already understand the 3 kinds of order you can place on Bybit exchange. Now you've understand exactly how futures trading works and how to get started. Congratulations, you've learned so much today. Subscribe to this channel, turn on the notification bell, and like this video, guys. Like this video. If you have any more question about futures trading or anything you are still confused about, use the comment section to let me know, or use the comment section to let me know how you feel generally about this video.